Good afternoon and welcome to Money Mondays. My name is Katie Combs. I'm the adult programming librarian from the Fort Worth Public Library, and I'm here for this four-part series for Money Mondays, and that is brought to you by curriculum from the Consumer Financial Protection Bureau, and we have adapted it and kind of made it our own thing. So I wanted to go ahead and start our newest series, our new series of the week, which is on credit scores. And feel free, if y'all have any kind of questions at all, please post them in the chat box below, or you can post them in the Q&A box. And the Q&A box does allow you to post questions anonymously if that you feel more comfortable with that, or you can post in the chat box and we will answer those at the very end of the presentation. But I'm super excited to see you guys here. I'm going to put my chat on so I can make sure I can see all chats coming through, and we will go ahead and get started. Also, with the Money Monday series, each participant does get a toolkit every week. It looks a little bit like this. And that was emailed out to all the participants that have registered. You can also find this on our website on the Money Monday series section. So we will go ahead and get started right away. So our first week, or our second, this is our second week. The first week we did basic budgeting. This week we have credit scores. So we will go ahead and knock it off. And if you have any questions, feel free to let me know. We can answer them at the end. So what is credit? So credit is the ability to borrow money and repay it later. So you have your debt and you have, what credit you have available. So debt is the money that you have to repay when you've used it. So if you use a credit card, you charge money on the credit card and then you have to pay that money back. Now, you also can have a credit available to use without having debt. So say you have a credit card, you maybe have a $10,000 limit. If you charge money on that card and then pay it right back off, then that's credit available that you have. And say you only charge, $2,000 on it, you have $8,000 of available, excuse me, $8,000 of available credit that you can use. So that is credit. And you also, we'll get into that a little bit later. Credit also consists of having credit scores and being able to have a credit report. Those are also very important, parts of credit that we will discuss later in the week. So this is kind of a little bit more explanation of credit. So you have your use of credit. While you use credit, it creates credit history. That credit history is then compiled into credit reports. And then that report is used to calculate your credit score. So this is kind of how the credit is being used in order to create your credit report. And that credit report is being used by employers. If you're trying to rent, if you're buying a house, this is very important. Buying a car, and it's a very important piece of information that is really attached to you and your social security number. So why do credit reports and scores even matter? So a poor credit history can really make it difficult for you to get a job, to get any kind of security clearance, an apartment, insurance coverage, lower deposits on utilities, and getting a credit card, and even to be hard to improve your score later on. So we'll talk a little bit about these for a minute. So your credit report, it does get pulled by certain people, and they use that as kind of seeing whether you are worthy for more credit. So if you go and buy a car, they're going to pull your credit, and that credit is going to determine what your interest rate is or what you qualify for. And that banks are looking at that to see whether you are a credit worthy borrower, if you are a worthy person in order to kind of get a lower interest rate. So you really want to make sure that that credit report is high so that they can kind of see that you are eligible for these lower interest rates that really will make a difference on your loan. You also use them to get an apartment, get utilities, buy a house, very important. So you want to make sure that you try to get that credit score up as better as possible. That way you can have a kind of a better opportunities later. So a credit report, if you haven't pulled your credit report, we will talk about that in just a couple of slides. But a credit report is basically an overview of your credit and what you've done so far in your credit life. So it has your identifying information. This would be your name, your current address, maybe your employer, if you've given your employer's name to any credit card companies or anything like that. So next is public record. So public records are a lot if you have a judgment against you or a lawsuit against you, that is public record and can be listed on your credit report. You also can have a collection agency account. If you do have things that are in collections, that will show up on your report. That does say that you are past due on something and it has been sent to a collection agency that is on your report. And we'll talk about that a little bit later, how long they stay on your report and anything like that. So that way, and how we can get them off, because it does negatively impact your score. You then have account information. So if you have a loan, if you have a mortgage, this is going to be next. So it'll say you have a credit card through Chase. It will say Chase Bank. It'll say how much your credit line is, how much you owe, and your payment history, which is really important. So that was kind of a good thing if you're pulling your credit report to kind of see how much you owe at each one. They are updated monthly, so that way you can see how they change month to month. And we'll talk about this a little bit later in the class about how you can pull your report, how often you can pull your report, and where to pull it from. And the last one is inquiries made to your account. So you may have heard on soft pulls or hard pulls to your credit account. So these are things if you apply for a new piece of credit, say I want to apply for a loan. So I will apply and they pull my credit report to make sure, like we talked about earlier, they pull your credit report to make sure that you are a credit-worthy borrower. And they will look, and that inquiry is being made on your report. And that stays on your report for about 2 years. So this is the reason that they keep track of inquiries, because they want to make sure that you're not applying for credit too often. That kind of shows that you're relying too much on credit and not so much on your assets. So this is why you want to keep your inquiries pretty low. They're not super, I believe a good would be 2 to 3. They do come off every couple of years. So it's always good to kind of keep track of how many inquiries you have and make sure to ask whoever you're applying for, whether it's going to be a soft pull or a hard pull. So that's a very important thing to keep track of. So negative information. So these are things that we talked about earlier as far as collections, maybe bankruptcies, lawsuits. These are negative information that stay on your credit report. Evictions are also on there. So these can appear on your credit report for a specified period of time. So usually it's 7 years. The only thing that's not 7 years is bankruptcy can stay on your credit report for 10 years. So if you do have a collection and you have paid it or it's outstanding, make sure to kind of see how long it's been, because a lot of people, they realize that, that happened 6 years ago. I can either pay it now or I can kind of wait, and in 7 years it'll be taken off. Also, if you have a collection that you've paid and you didn't have them sign a pay and delete, which is something, if you're not familiar, which is if you pay a collection, you can have the collection agency sign a notice saying that once you pay it, they will take it off your credit report. And I think we'll touch on that a little bit later as well. But negative items, these kind of evictions, all these things can stay on there for 7 years and then they'll be taken off. And bankruptcies will stay on your report for 10. Now, civil suits and judgment can be reported on your credit report for 7 years or whatever the statute of limitations has expired. So whichever one is longer. So if you do have a civil suit or a judgment, it should say on your paperwork how long this would stay on your credit report. So it's really important to keep that date in mind. So there's no time limit to the length of time that positive information can stay on your credit report. And this is actually really great because we'll talk about a little later, the way your score is comprised. It is a big thing that keeps in count is positive payment history. So there's no time limit on the time that how long that you've been paying your credit card on time every single month. There's no limit on that. There's no limit on paying your reports off on time and making sure that everything is positive. So you really want to keep in mind about that your positive information does stay on there indefinitely. So when you pull your credit report, you'll want to figure out how to read it correctly. So a lot of credit reports, especially if you've been having credit for 20, 30 years, it's going to be pretty long. So you kind of want to keep in mind how to read it efficiently. So you want to say, who does this credit report belong to? Making sure your address is correct. And this is kind of how, when people pull your credit report, this is what they'll be looking at as well. So you want to make sure to know what they are going to be looking for. So you want to make sure your name is correct, your address is correct. Where do you work? If that's correct, then you'll have your public records. So they're also looking for, are you late on any accounts? So this is another thing to look for. So if people are trying to figure out whether you're creditworthy, they will go through and say, is he late? Are his accounts in good standing? What are the balances of the accounts? in the account information section that we talked about a little earlier. What are the balances? So are your credit cards maxed out, or do you pay them and use the less than 30% in usage rate, which we'll talk about later? Are they current? Are they in good standing? And how much does he owe? Can he afford to take on more debt, or is he pretty much kind of strapped where he is? That's really important, the thing that they look for. Does he have accounts in collections, and what is the balance owed in collections? So say you have a medical bill, it's very small and not really significant. They may look over that more than you have a couple of grand that was left to an apartment, or one of your credit cards went to default. Those are things that they look for to kind of see to make sure that, again, you are credit worthy. And so then what do the inquiries tell you? So are they applying for credit too often? Is this something that maybe you are the fifth or sixth lender that they've already tried and been denied? It's something that they look for to make sure that they are, your inquiries are low. And then what is their opinion on this person's credit history? Is it positive or negative? So they will go through this whole entire 10 questions. And at the very end, they'll think and say, should we borrow to this person or not? Yes or no? And if so, what interest rate would we give them? Should we give them a lower interest rate, or are we giving a higher rate? Because it might be incurring a little bit more risk for us if we borrow to them. So these are things that people look for when you're reading a credit report. So it's really great to know where you stand on each one of these points. So the credit report companies that you can look for are Equifax, Experian, and TransUnion. So you can get a free credit report from them every single month, once every 12 months. So you can get, a lot of people recommend get one of these every 3 months. Maybe get Equifax in January, Experian in March, and TransUnion maybe in September. So these are things that you can kind of look for and see how my credit report is doing. Now you can pull all 3 of these at once. That's totally fine as well. Say I pull all of my credit reports every year in March. So that's something that you can kind of look for and making sure that nothing has changed in the past year. You can also look for other apps such as Credit Karma. Experian has a tool. You can even go on your banking app, such as Discover, Chase, any banking app usually has your FICO score on there as well. They may not have the full credit report, but they do usually have your score. So that's a good thing to have, especially for if you use Experian. They have a credit monitoring tool that you can use and kind of see, has anything changed on my report? Do I need to pull it at any time to make sure that everything is correct and accurate? And you can get those 3 at www.annualcreditreport.com. So you can check those and make sure that, check those there and make sure that they are accurate. So go in a little bit more. So credit score. So this is different from your credit report, but their score is tabulated based on your credit report. So they are calculated using that information. So a higher score makes it easier to qualify for a loan or lower interest rates. And you can have many different credit scores. So we talked about a little bit earlier. Here we have Equifax, Experian, and TransUnion. You may have a different score for each of those. It really just depends. It depends on who has what information, whether that information is updated or not. You may have a credit card update on the 18th of every month. Equifax may have that information and TransUnion may not. So it really just depends on when the timing is. So each one of those 3 has a different score for you. You also have your FICO score, which is kind of a calculation of the majority of those to kind of have an average score. So a little bit more. So this is based on FICO. So these are the things that you need to look for in your credit report that affect your score. So we have our payment history here, 35%. That makes up a very large bulk of your credit score. And the reason why this is because they want to make sure that your risk of borrowing is low. So they want to know, okay, we may want to take a chance on you and make sure that you have this money and you can pay whatever you need to pay, buy a car, etc. But we want to know that you can pay this back on time, because if you don't pay this back on time, then we don't get that money back. And then you'll incur a lot of late fees and it just does not look great on your report. So you want to make sure, if anything, you have a excellent payment history. You then have 30% of accounts owed. So this is a little bit what we talked about earlier. So you may be, you may have a great score, or you may have a not any collections, not any judgments, but you may have maxed out all your cards, and they want to look at and say, well, yes, they have a pretty average score, but they're maxed out on all their cards, and they just may feel a little debt heavy and may not want to kind of loan amounts to them. So, and this is also for personal, and then us businesses handle this too. So businesses have to kind of toe the line on making sure that their debt to equity is pretty even, so that they can make sure that they're not relying too heavy on debt, to make sure that they can make those payments with interest and stay afloat. You then have your length of credit history. So this is something that a lot of new borrowers struggle with. So you may be, say you're 21, you just got out of college and you've never had a credit card. You may not have a great score because they don't have any information to prove that you are a worthy credit borrower. So this is a really important thing. Maybe you can talk to your parents. They can put you on as an authorized user on their credit cards, something that would help build your credit early. So that way you can kind of get that score, because it is a little difficult for new borrowers that they trying to graduate college, they want to get an apartment, they want to buy a car, but they can't because their score is just low due to the length of credit history. So again, look into authorized users. If you have a family member that is willing to add you onto their card, that way you can kind of have that length of credit history that's always recommended. You then have type of credit. So this is a little different. So you have secured and unsecured credit. So secured credit, those are things like a car loan. So if you do not pay your credit back, they have a collateral piece of collateral they can take back. That is the car. Mortgage, secured, they can take your home. So then you have your unsecured, which is credit cards or bank loans. These are things that if you do not pay this back, they don't have anything they can take from you unless they put a judgment against you, which is a little bit further on. So these are things they want to know. Do you have a good mix of credit between unsecured and secured? Maybe, and a lot of people have noticed this later on, that a ton of people have student loans. So they're not really going to look they wouldn't maybe look as much on student loans, because that's a thing that a lot of people have. That's not really as noteworthy as if you have maybe 20 grand of credit card debt that's unsecured. So these are things that can help build your credit. So if you get a car loan, it's secured, you pay it off on time every month. These are things that can help build your credit, and rather than being in debt and kind of using that debt to income ratio a little bit higher. So then lastly, you have new credit. So this is what we kind of talked about earlier, as when you apply for a new credit, you have your inquiry there. You also, it does kind of knock down your length of credit history. So you want to take a look at that. So it's just making sure that you haven't applied for a lot of credit at the same time, just to make sure that kind of shows that you are struggling a little bit and you may not be able to pay that back right away. So these are things that your credit score is based off of. So it kind of shows how heavy each percentage is, and so where to kind of put your weight behind it. If you may not have you may have a lower length of credit history, go ahead and throw your weight and make sure that you're paying your cards on time in full every month, and that will boost your payment history, and it may bring you up a little bit more. So we then have our credit utilization rate. So these are a little bit more, this example is talking a little bit about credit cards, but we'll also talk about debt to income ratio. So your credit utilization is, say you have that $10,000 credit card, and you have, let's see, the example here. So they have $5,000 of total available credit on their card. They charge $3,500. So your utilization rate is the amount charged divided by your available credit. So that's 70%. So that's a little bit more heavy. What we talked about earlier, as far as amounts owed, this is what they're going to look for, is your debt to income and your credit utilization. These are what they're looking for. So they want to make sure that your utilization rate is low. So the rule of thumb for utilization rates is usually 30% or below. So you want to make sure that you have 30% of your card charged or less. So that lets the borrowers know, or the lenders know, that you are being responsible with your credit, and you'll make sure to kind of charge it and pay it off on time. And that way you're not getting over your head in debt and interest rates. So again, with the credit utilization, we also look at debt to income. So if you want to know your debt to income rate, you'll add up all your debt, divide it by your income. So you want to kind of see where you're kind of at. Does your debt kind of take over a lot of your monthly payments? Does that take over your monthly income? So basically add up all of your minimum payments on your debt, divide it by how much you make per month, how much of your income is going to debt payoff. So these are kind of things that you kind of want to look for as well. So the two very important things about utilization and debt to income. Okay, so this is what I talked about a little bit earlier. So this is in your toolkit, which is one of the ones on here is requesting your free credit report. So if you view your toolkit, you'll see that in here. So you'll basically pick a method to order your credit report. So you go online, by phone, or by mail. And then you'll decide when you'll order each report. So that's what we talked about a little bit earlier. Are you going to order it, all at once a year, or space them out over the year? So these are all in your toolkit ways in order to get started and how to get your credit report. So then we have our next toolkit section, which is reviewing your credit reports. So this is a really great worksheet in kind of checking on what we talked about earlier, checking off and saying, this is correct, my social is correct, my telephone number is correct, and making sure that everything just goes line by line, making sure that it's correct. And if it's not correct, we'll talk about how you can dispute that. This is really, really important because we do have a lot of identity theft going on. So you want to make sure that your identity has not been stolen, they didn't steal your social security number, get a credit card in your name, and rack up some debt. So that's why you want to make sure, always check and be sure that everything is right on par there. So then we have our handout on disputing errors of your credit report. So to correct these errors, it's really important to contact both the credit reporting company and the source of the mistake. So say that, again, we'll use Chase Bank as an example. Say that Chase Bank, you paid your credit card on time, but Chase Bank didn't register that you paid that card. So it went on your credit report and said you paid late or didn't pay on time, which does affect your score, which we talked about a little earlier. So it's important to not to, say you pull your report from Experian, it's contact Experian and contact Chase and say, this is not correct, please get this fixed. And you can file that dispute online, by phone, or by mail. So, and this is feel free to look at that handout. It's really, really great. It's really detailed about how you can fix that and what steps you need to make sure to take. So you explain the error and say, this was correct. This is what you want change. I would like this note in my credit report to be changed to say that I did pay this payment on time in full. And that way they can make that change for you. So just very clearly identify each mistake, state the facts, explain why you were disputing the information, and request that it be removed or corrected. So when if you mail your dispute letter, it's very important, send it by certified mail. So you just go to the post office, ask for certified mail, return receipt requested. That way, if you do by mail, they cannot say, well, we didn't hear from you, so we assumed it was fine. You want to make sure to have proof and say, I did submit this in here. Here is my receipt. Someone had to sign for this. Please give me an update. That's way you can make sure to have a lot of proof and a lot of knowledge on your side. You also want to enclose a copy of the portion of the report that contains the disputed items and then circle and highlight, make sure they see this is exactly what I'm looking for. This is exactly how I need it fixed. This is exactly what it should look like when you are done. Very matter of fact, making sure that you are standing up for yourself in those errors. So then we have another part of our toolkit, which is getting and keeping a good credit history. So we want to make sure to identify a strategy of improving and maintaining your credit history that works for you. So this is very specific. Like we talked about earlier, you may feel a little less on one point. Say you're a new borrower and your score is a little bit low because of the low credit history. You want to make sure to kind of keep in mind that you can raise your score by using those other factors as well. You want to implement that strategy and monitor how your credit score improves. So we talked about earlier, you can pull your credit report from 3 different bureaus once a year. You can also keep track of it using those other tools we talked about, such as Credit Karma or your banking app or Experian, any of those other options that can monitor your score for you. And then once you're done with that first strategy, pick a new one, keep practicing the good habits. So a lot of people reach out, say they want to buy a house and they haven't pulled their score in a while, and they need to buy a house and they want to buy it in the next couple of months, but their score is low. So the big thing to think about your score is it is going to take a little bit of time. So you want to kind of pull it early and keep an eye on it early, making sure that you are kind of correcting those things before you have to actually use that score to apply for something. So if you know that you want to apply for a house or apply for a car in the next 6 months, now is a great time to start looking at your score, seeing if there's any collections that you can pay off, any kind of negative things that can be removed, and then also just making sure that you can implement these good habits and have the score steadily rise up. So these are very important to make sure that your score is being looked at and taken care of over the next few months. We do want to do a disclaimer that the Consumer Financial Protection Bureau has created this toolkit that you are seeing. The toolkit that each participant gets is part of the Your Money, Your Goals toolkit for consumers. And they did provide some training materials that we have used. So feel free to reach out to me or reach out to them if you have any more questions about that. And that way we can get some more information to you. Our section next week is over paying off debt. So we wanted to kind of touch on credit history. That way this week you can pull your credit report and see how much you owe and to whom. And then next week we can use that information to build your debt toolkit. So we will go ahead and address that next week.